Welcome back to Luke's Properties YouTube channel. In this video, I'm going to show you exactly what you should do with £20,000. I'm going to show you exactly how to invest £20,000 in a buy-to-let property right now. I'm currently doing this with one of my students, and these are the exact numbers that we've been working on and his expected returns. So I'm not pulling these figures out of thin air. These are real numbers. This is a real property that one of my students is going to view this week. And if the viewing goes well, he's going to put an offer in and hopefully buy a house just like this. So this is a real life example from a real property investor who's really buying property. I've also built a portfolio of properties myself using this exact strategy. And for all you people who like to fact check, have a look on Companies House. You'll see a couple of my houses on there, just so you know that my opinion is validated, because I do this day in, day out. And buying properties just like this has allowed me to retire early. I'm 36 right now, and if I wanted to, I could stop working and put my feet up and just collect passive income from my buy-to-let properties. I've also got a portfolio of rent-to-rent properties, and I teach people how to do rent-to-rent and how to do buy-to-let, which I enjoy. But day to day, I just make content for you guys to help you achieve what I've achieved in a shorter amount of time. 7 years ago, I only had around £6,000 to my name. I used a rent-to-rent strategy to build up my cash flow. That allowed me to save up enough money to start buying property. I kept buying properties, renting them out, and today I don't need to work anymore because of the decisions and the investments that I made years ago. And if you're watching this and you're just as ambitious as I am and you don't want to work until you're 67, then concentrate and use this blueprint to retire early. So let's get into it. So you're going to go and find an £80,000 house. My student has found a house like this in the Staffordshire area in ST6. But to be honest, you can find houses like this all over the UK. I buy houses in Wales for around £95,000. I've helped some of my other students buy properties in Wales too, but also in Nottingham and in the Northwest. So there's opportunities all around the UK, and there's markets within markets. The market isn't just the London property market. There's all these different areas in the UK where there's some really exciting returns that are expected. So it's a great time to invest. There's no better time. So you go and find an £80,000 house. This doesn't have to be the worst house on the best street. Typically, we're looking for houses that are in 7 to 8 out of 10 condition. They may need a lick of paint here or there, slight improvement, mainly cosmetic. Similar to my rent-to-rent refurbishments, you're going to improve the perceived value on the surface level. So just tidying them up, making them more appealing and ready to be rented on the open market. But generally speaking, we're not looking at refurbs. We're not looking at houses that need huge refurbishments. We're looking at houses that are pretty much ready to be rented out as they are. So you find this £80,000 house. To buy this £80,000 house, you need a 25% deposit. So that's £20,000. Now, if this is your first house, which it is for my student, then he shouldn't be paying any stamp duty. He's going to have to pay solicitor costs of around £1,500. And because it's going to be his first time working with a mortgage broker, he's going to have to pay around £650 to the broker, which brings his total capital employed to £22,150. Now, we've done some due diligence on other properties in the area, and it seems like similar properties within a quarter mile of this property are renting out for around £650 a month. So we're going to rent this house out for £650 a month. His mortgage is going to be £225 a month. Insurance will be £30 a month. It's always wise to put aside around £45 to £50 a month for minor maintenance here and there. So we'll put £44 aside. That's going to give him a net rent of £351 per month, or £4,212 per year. Now, when you take that £4,012 per year and you divide it by your total capital employed of £22,150, and then you multiply that figure by 100, that gives you a 19% return on your capital employed, which basically means the rental income is paying you a 19% return on the capital that you employed into the property. So rather than working out the yield, I prefer to work out your actual return on the capital that you've employed into the property. I find this figure to be more accurate, to be more specific, and based on the net costs. So a 19% return on your capital employed every year from the rental income alone, not factoring in the capital appreciation, is a fantastic return. Most savvy investors will be happy with a 7 to 10% return in the stock market. So to get 19% from just the rental income alone from investing in a buy-to-let property every year from the rental income is fantastic. And these are the type of opportunities that are out there, guys. So you're getting a 19% return every year from the rental income. Now let's look at the capital appreciation side of things. Now the Bank of England base rate is set to drop from 4.5 to 4.25% at the very moment whilst we're making this video. So today is the 8th of May. I haven't checked yet, but I'm pretty sure that the Bank of England base rate has dropped to 4.25%. And if it hasn't, it's going to very soon. What will happen then is millions of home buyers are going to enter the market. So millions of people all over the UK have been waiting to buy a home, and they've been waiting for interest rates to drop so they can afford the mortgages. So when the Bank of England base rate drops, so do mortgage rates. So millions of home buyers are now going to enter the market trying to find a home, and they're going to try and capitalize on a 4.25% interest rate rather than a 4.5% interest rate. So what's going to happen here is the ever-growing demand for property is going to increase. And because the supply is still where it is, the gap between the demand and the supply is going to grow. And when there's a big gap between supply and demand, what happens then is house prices increase. And this goes for any asset class. Any asset class that there's a finite amount of or a limited supply of with a huge demand will make that asset increase in value, because more people want it than there is available inventory or available stock. So always remember that. This is fundamental economics, very basic stuff. When demand is high and supply is low, price goes up. So house prices are set to increase. Now let's look at the expected house price growth from 2025 to 2029. I've got this data from Savills, and I've always found Savills data to be pretty accurate. I actually think some of these numbers are quite reserved, because over the last 5 years, I've had around 30% appreciation on my properties, and Savills is expecting another 25% over the next 4 to 5 years. So the expected growth for house prices in the UK in general is 23.4%, and within that market there's sub-markets, so there's markets within markets. And just having a look at a few of these different areas, we've got the Northwest expected growth of 29.4%, we've got the Northeast expected growth at 28.2%, we've got my investment area Wales expected growth of 25.2%, we've got the Southwest expected growth of 21.6%, and then we've got London at the bottom, expected growth of 17.1%. So my student's going to buy this house for £80,000 this year. Now let's have a look at his expected returns leading up to 2029. So by 2029, it's very likely that this house is going to have appreciated by at least 25%. So that means the house will be worth £100,000. Now rents also increase around 5% every year too. So let's have a look at the 2029 numbers in more detail. So the house price will be worth £100,000, the rent will be £800, the mortgage will be £225, the insurance will still be £30, maintenance £44, which is going to give my student a net income of £501 per month, or £6,012 per year. And again, going back to our return on capital employed formula, if we take that £6,012 and divide it by our total capital employed of £22,150 and multiply that figure by 100, that means my student is benefiting from a 27.1% return every year from the rental income in 2029, which is crazy. That basically means that every 3 years going forward from 2029, my student will have enough money from the rental income alone, if he saves it, to go and buy another house just from the rental income, not factoring in the appreciation of the asset, which we're going to talk about now. So over that 5-year period leading to 2029, my student would have collected around £21,000 in net rental income. His appreciation will be around £20,000. And if you add those two figures together, that gives you a total of £41,000. So he's turned £22,150 into £41,000 just by buying a house, renting it out, and being patient and waiting. So he's turned 22,000 into 41,000. And if he's smart, which I think he is, he can then use that money to go and buy 2 more houses, which means basically he gets 2 houses for free, all because of the smart, savvy investments that he made this year. By the way, guys, this guy's only 20 years old. So imagine what sort of beast he's going to be by the time he's 25, 30. He's already making investments like this at 20. Some of you guys are in your 40s and 50s and still deliberating, still sitting on the fence and not taking action and not investing in assets like this. And then you're going to wonder why you're still working into your 60s, because you didn't make moves, you didn't invest, you just kept doing what everyone else is doing. You stayed in the rat race, you followed the crowd, and because of that, you've got the same result as everyone else. Retiring at 67 with a small pension, that's barely enough to allow you to live at a stage where you're not in your prime and you can't even enjoy the retirement as much as you could do in your 30s, 40s or 50s. So one house can turn into 3 houses in as little as 5 years, just from being savvy and investing. These are the powers of property, guys. Now, if you want someone to help you do this too, I'll put a link in the description below. Click the link and there'll be an option for us to work together. If not, then just copy this plan. Copy what my students doing and set yourself up for life, guys. 5 years of focus, of determination, of discipline can set you up for life and allow you to retire early and live life on your own terms. Isn't that what we all want? I hope you've enjoyed this video, and as always, I'll see you on the next one.